Let's get across the market open now. Kai Chen joining us from MPC Markets. Kai, great to see you on this Wednesday. Of course, results coming thick and fast. Now, big one today, CBA. What have you made of that?
It's just come through an hour ago, and it's basically beat market expectations. The EPS is about 3 cents higher than where the market was expecting, and they've also announced a really chunky dividend, so $2.25. So yeah, I think a lot of pundits were saying, okay, the price, it is factored into the price, but I think it'll continue to go. We're going to see this trend in banks continue to be strong. Most of the US banks reported quite profitably as well. But yeah, it's still very high valuations for the banks.
Eye-watering valuations, you would have thought, and all the banks defying, particularly the broker recommendations there, they've slapped sells on everything. But so your expectations then, it is going to continue to climb, and I guess it's a default setting, isn't it? Particularly when you talk about where the super money's going.
It's at 11.5% now, I think, with an increase coming as well. So, just naturally there's more money going into the super industry. They have to allocate to the bigger players on the index. CBA is one of them. I don't really see any momentum stopping it at the moment. There's really no catalyst.
Did you get across any of those comments from Matt Common talking about perhaps that weakness in the economy? And then I guess maybe we'll look forward to a rate cut next week, possibly. How are you seeing that play out for the banks?
Yeah, if the RBA was to go, probably the next meeting would be the most logical place. With elections coming up, I think they don't want to have rate move decisions very close to the elections. In terms of whether they have to or not, I don't think they have to. Most analysts the market has basically priced in a rate cut. But yeah, in my opinion, I don't think there's a strong reason to cut. We'll see.
Now, another big stock to report yesterday was CSL.
Yes.
And it actually dropped about 5% on the day. So a bit of disappointment there, I guess, looking ahead at its business, particularly with its focus on the US market.
Yeah, I think, its result wasn't that bad. There was some business lines that were underperforming, but overall, it still made an increase in profit, and it actually opened up a little bit higher yesterday, but then just throughout the day got sold off to about 5%. So, that's one of our favourite range trades. I think it's definitely within the value zone at the moment, CSL. So we're pretty interested to buy CSL at some point. There is probably a bit of negative momentum on the stock at the moment, and we'll probably be patient to see where it ends up. But I think it does represent a good buying opportunity.
Now, elsewhere, Kai, perhaps away from what we're seeing in earnings season, there's a focus on commodity prices at the moment, clearly given the tariffs that Donald Trump is throwing around on steel and aluminium, of course. How are you looking at the resources sector?
Yeah, and as you say, it's his favourite tool, tariffs. It's going to make the US rich. I think as you see, there's a lot of tariffs going, especially for the steel industry, aluminium. They've done. I think I'm doing on the EU, Mexico, Canada. So there's a lot of disruptions. I think for commodity prices, it just means more volatility. There were some talks of exemptions for Australia, but who knows? I think Peter Navarro says that he's against exemptions on anyone, so it's a blanket basically rule on tariff for everyone. So I think it does cause a lot of disruptions in the commodity sector.
Any particular commodity stocks you're liking at the moment, or perhaps ones that you're steering away from?
I think BHP is good. I think it does represent value. Probably iron ore. Nothing where I'm super excited about. All the commodities. Oh, actually, gold. Sorry, let me rephrase that. Gold is doing exceptionally well. So precious metals, obviously, it's about to break to new highs. But say lithium, with the news coming out with China, the Chinese battery makers restarting production again, it's really going to cause more supply. So we saw some of the lithium stocks sell off yesterday. Iron ore, I don't think there's a hurry to go anywhere. I think it's most of the companies, it's in the value zone, but I don't really think it's in a rush to get back up at the moment.
So, I mean, you mentioned gold there.
Yes.
Are you buying still at these levels, given how far it's run? Because there is that lag, of course, between the gold price and the producers.
Of course.
Where are you seeing that value at the moment?
Yeah, we got into some of the gold miners pretty early on for our clients, so we are holding it. Newmont did represent a really good opportunity. I mean, their productions did miss a little bit because of operational issues. But I think, as one of the biggest gold producers, and the cost at which they're producing, it made a really good value proposition in terms of the gold sector to be invested in Newmont. It's recovered a little bit now. I think there's probably a bit more to go for Newmont. In terms of probably smaller plays, probably West African Gold is not a bad stock to look at the moment. But there are some news that have come out. You've got to be a little bit careful. Again, it's in the value zone, but they are coming up with some operational issues. But it's an interesting one to keep an eye on.
All right. Overall, look, early days, but how would you assess what you've seen in earnings season thus far?
Yeah, I think generally it's been fairly positive at the moment. Obviously, excluding CSL, which wasn't a terrible result. But we've still got the bulk of it coming up in the next 2 weeks. So, to be seen.